Matt, what are we going to talk about today?
Oh, well, do you even have to ask? Of course, we're going to talk about Kevin Warsh's spectacular debut as the chair of the Federal Reserve Bank and how he's going to steer the economy in just the right direction. And of course, we're also going to talk about this year's State of the Nation's Housing Report from the Harvard Joint Center of Housing Studies. We also have an update on the affordable housing market from Yardi Matrix that pairs well with that Harvard Housing Report. But let's cut to the chase and talk about what everyone wants to hear: Kevin Warsh's dramatic, attention-grabbing entrance as the new chairman of the Federal Reserve. Dan, what happened and what does it mean for investors?
Well, it certainly was dramatic. He put the market on notice that we've got the Kevin Warsh from the great financial crisis. The Kevin Warsh who is an over-the-top inflation hawk.
Yeah.
The Kevin Warsh we thought we might get, but not the Kevin Warsh that Trump thought might lower interest rates. I mean, what a bait and switch.
Yeah.
If he was looking for a nickname, I think he earned one at this press conference. How about this? Task Force Warsh.
I love it.
It kind of rhymes,
Yeah.
if you say it right. So we saw Task Force Warsh. We saw his true colors at the press conference following his first FOMC meeting as chairman. And again, he sure looks like the hawk he was back in 2007.
Yeah.
We focus on housing here at the Multifamily Dispatch and here at J&G Companies. And so we think rates are restrictive too. So what are you going to do about it, Mr. Warsh? If you think rates are restrictive on housing, it sounds like nothing.
One easy solution, I don't know.
It sounds like nothing. It seems like the Fed is now focused on house cleaning, task forces, remaking the Fed the way that Mr. Warsh sees fit. So what? What does this mean? Well, either home prices will come down as demand and affordability remain challenged with higher rates, or home prices will stay elevated and out of reach for many, would-be home buyers who will otherwise be renters.
Yep.
Borrowing costs to build new apartments will remain elevated, and borrowing costs to purchase existing communities will also remain elevated. I think this keeps cap rates elevated as compared to the early 2020s and makes building new supply more difficult.